Good morning, good afternoon, good evening, depending where you are on this planet. And welcome to the Wednesday, the 13th of July Bull vs. Bear webinar here. Steve Miley on the call for trade day. Welcome, everyone. Going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at the earnings calendar as well. Not too much on it today, but US earnings season kind of kicks off in earnest as of tomorrow. Then we're going to take a look at some articles from the major news wires in here. What are the macroeconomic fundamental geopolitical events that are impacting markets right here, right now? And we'll take a look at the charts. What's going on in the charts? Where are the profits to be made today? Let's kick off with the data first of all. Green. Don't see the green so much these days. UK data this morning, GDP data, industrial production data, manufacturing production data, all beating expectations in here. So a positive from the UK in here, data better than expected. And so showing in here, a lot of the data we're seeing more recently is slightly starting to beat. Those PMI data, if you remember, I most spoke about this on Monday, the PMI data from last week, better than expectations, the labour data. So the growth data beating expectations. If we start to see a rollover in inflation data, which is possible, okay, and today's obviously a key day. German CPI already this morning, bang in line with expectations. The month-on-month number coming in at 0.1. French CPI bang in line with expectations. So markets in here starting to see expectations being hit for CPI, not worse than expectations. That's been the tail of the tape recently, right? All the inflation data has been worse, and the growth data is surprisingly positive. So we'll see, say, the employment report last week, the PMI data last week, GDP data, industrial production from the UK to that this morning, slightly better than expected in it, and all of that's showing that the market is starting, or the central bank interventions, the interest rate hikes that we've seen in 2022 are starting to have an impact on inflation, hopefully, but then we will see a slowdown, because obviously these numbers that we're seeing, all these GDP numbers, the PMI numbers, have been ratcheted down. The expectations have been put lower because we expect them to have an impact, but they're not as low as the expectations. So that's good. It shows that the economies are not slowing as much as strategists and economists think they were going to be slowing. So that's definitely a positive. Clearly, the biggest data of the week, arguably the biggest data now each month, is the US CPI data, even more important than the employment data. Okay, so we're certainly going to be watching that. We've got that in less than an hour's time now. Just an hour from just under an hour from now. It's going to be critical. You need to be watching this. A high print in here is going to be negative for stocks. Negative probably for growth as well. So negative for oil, possibly good for gold. Not necessarily good for gold though, but yeah. So because probably negative, potentially negative for gold, because you'll see the dollars probably rally on a big CPI number, because there'll be an expectation of a more hawkish Fed. More hawkish Fed then equals a stronger dollar potentially weaker gold. But certainly you would expect, if these numbers are above expectations, and we're watching for that core CPI number, really is the key one to watch. The month-on-month core number, looking back, and also the year-on-year number as well, and the straight CPI year-on-year number. So certainly watching those, and they're going to be critical for today. Okay, I would suggest not having an open position running into that data. Wait till you get the data, react to the data. Okay, Bank of Canada is at 10 a.m. this morning Eastern time. If you're trading, that's going to be important. Expecting in here a rate hike, so a 75 basis point rate hike in here from 1.5 to 2.25%. Watching out for the statement, really, how hawkish, not necessarily going to impact on our markets, but it'd be interesting to see if another central bank is more or less hawkish than what we're seeing from the Fed. If you're trading oil, obviously crude oil inventories, we get that at 10:30 Eastern. And then the Bank of Canada press conference is 30 minutes after that, 11 o'clock Eastern. Okay, so we're watching all of those things going into this afternoon. But the real focus is now in just 55 minutes, the CPI data. I did mention earnings in here. Nothing really of significance in here today. We've already added stuff out from Delta and Fastenal. Don't even know who Fastenal are, if I'm really honest. But these are not really that significant. They're not going to impact into the major indices. As of tomorrow, this is going to be more important. Tomorrow, JP Morgan, Morgan Stanley, we'll talk a bit about those again tomorrow. And then United Health, Wells Fargo, BlackRock, Citigroup, US Bancorp, PNC, Bank of New York, Mellon Straight Street. A load of financials out on Friday alongside United Health. That's going to be the key focus Thursday, Friday on the micro data, the earnings calendar. 5 things you need to start your day. So Russian inflation is raging back where we are really in the midst of a recession or inflation, excuse me. Final made by the National Bureau of Economic Research. Okay, so but we're looking for this headline inflation print today from June. Okay, it's going to be important. Twitter suing Musk. Okay, so that's ongoing since that was announced after close on Friday. Now Twitter going to sue Musk for his abandoned takeover bid. Whatever today's specialist is concerned, that the high oil prices is far from over. So stocks steady. Stocks in here this morning kind of initially lower, rebounded, having had a very weak close yesterday. So talking about that, there we go. Wall Street tumbles at close. With worries ahead of CPI report. Yeah, well, maybe some position squaring. It wasn't a really big sell-off in here. Yes, we went lower going into the last hour of trading yesterday. But if we look in today, futures and stocks kind of mix, kind of holding ground in here going into this morning. European stocks holding ground. Oil saw a massive drop yesterday. Big sell-off in oil. And then we've had only a slight rebound in here today. And the bond curve flashing recession. Well, it's been flashing recession for ages. Okay, the inversion of the yield curve. They're talking about that. Okay. What else? Chinese stocks have gone significantly lower, erasing June gains already. And because of this COVID zero policy, outbreaks of COVID again, and real concerns about further lockdowns coming out of China, damaging the economy. Twitter, we've already mentioned, suing Musk. This is a spring of hope. Ukraine hopes for grain export breakthrough. Istanbul talks. So talks in Turkey. Looking for talks to kick off in Turkey about releasing grain that's blocked in Odessa. Okay, 20 million tons of grain. Okay, that would obviously alleviate some of the food issues we have, and so that could be a positive on the horizon, but nothing as of yet. Stocks and euros slip ahead of key. That was from really an update from yesterday, and then in here. Going into today, if you look, we've got about a third, sorry, 2/3 to 1% lower on European indices. But remember, they were paying catch up with the losses that we saw in the US at the end of the day yesterday. Okay, so these markets were closed when the US went lower in the last hour, so they're kind of playing catch up. That's why they're down in here this morning. And if we look at the US futures in here this morning, they've actually up. So we've actually had a slight rebound in here, having had those losses late yesterday. A slight rebound to recoup some of those losses already going into today. Let's take a look at the Fed tool. The Fed tool, now this column is continuing to grow amazingly. So remember, this column wasn't even here last week. Yeah, we had a column over here saying only a 50 basis point hike potential. Very small column, admittedly. Now, for the 27th of July meeting, 2 weeks today, we have now just under 86% chance of a 75. So pretty much nailed on, but a growing risk over here of now a 1 point hike. Okay, that's going to be a 1 point hike, so a growing risk of that. But as we said, and then going out into September now, this column's shrinking. So this is the 75 plus 50 column, okay, and this one's growing. So this is now for either 275s or for a 100 and a 50, whatever it is, total of 150 up, and even a small column in here. So this is a total of what? Got to get. This is 325. So this is 175 up. So this is kind of saying in here a 75 and 100, right? Okay, there's even a risk of that going forward. Right, let's take a look at the charts. As I said in here, guys, I don't think you should be entering anything pre the data. Wait for the data, react to the data. The market's oscillating. This is the S&P, benchmark in here. If you look where we are, I'm going to put this on in a second, actually. Let me take away, really interestingly here, respecting these downtrend lines. This more accelerated one that comes off the 21st of April high through the the 3rd of June high in here. Multiple touches here. Market approached and moved away, approached and moved away. So it's really respecting this trend line. Really important. I mean, it's probably not going to go and challenge that today, but it could do. That's up like just above 3,900, 3,903 kind of area. If it goes and has an assault on that, that'll be really interesting. If we get a low number today, you'll see a low number would be bullish for stocks, a low number on the CPI print. Okay, but at the moment the market oscillating. I'm going to go in and go to this. I'm actually going to step out. That's a 15 minute. I'm going to go to the 30 minute and look at just this kind of oscillating behavior that we've had in here since the low went in. Okay, so you got this. We spoke about this double bottom in here previously. I'm going to get rid of a lot of this old stuff. But if you look at the wider range in here, okay, this bigger range the market's been in. So this is the kind of the bottoming pattern in here, the bottoming process that we had. From here, from the middle of June to the is at the very end, beginning of July, the very end of June. This rebound, okay. So here's the 50% line, okay. So we're still hovering above the 50% line, around the 38.2% line of that whole move, okay. And then if we look at the retracement in here, it just gives you, so it just shows you the consolidation nature of all of this. If we go and look at there, the rebound that we're seeing in here from the end of June through the early part of July, we're just sitting around the 50% of that. So, these two lines, you look, the 38.2 and the 50% are pretty much coincidental. So the market's kind of just oscillating in the moment around these kind of retracement levels. Yeah, it's undecided at the moment. It did held yesterday, just spiked below these lows over here. So this low was 38.14 and a quarter. We spiked down there. Into the close yesterday below there, and also this 61.8. So you see that was an important area around like 38.10 to 38.08, spiked down below there, but then back above. Okay. Yeah, so I think, what did we get down to as a low yesterday in the end? 38.0475. Yeah, so the market and then trying to rebound from there. So, I mean, I think just holding in just about at the moment. But today is not about matter of having an opinion going into it. I mean, if you put a gun to my head, I'm slightly bullish, right? But, you're looking for the breakout. If it breaks below the low here from yesterday, you're going short, right? Pretty much in here. If it breaks above this kind of this little downtrend line that comes from last week, okay, then you're going long. Okay, so above like 38.50, it looks bullish. Below like 38.04, yesterday's low, it looks bearish. Okay, in between, we've kind of got a lot of noise in here at the moment. So I think you're waiting for those breakouts, and it could be a big moving day today, right? It really could. I mean, even if the number comes in around expectations, we could still see significant movements going into today. I'm not going to go through all the same on the Nasdaq in here, but it's the same sort of thing. Look, the market's kind of trapped in this. So I think the underlying thing to me is still bullish. You've got higher highs, higher lows in here, but the market obviously here didn't make a new high, just fell back from there. It did take out this trend line, so the trend line's not as relevant in here. For the Nasdaq, the one coming off the top is a long way away. So we have reversed the trend line. Still in it for me. Underlying bias is going to be positive, but again, if we step in, I'm going to zoom back out from the 15 to a 30. You've kind of got negativity from yesterday's sell-off, but then it kind of broke these lows in here, but then spiked back higher. Again, looking at this little down, just needs to be above there. It looks more positive, so that's all the way up. It needs to get like above 11,930, but then down through the low, down below 11,700, it looks negative. In between, it's kind of a lot of noise for me. Okay. Let's jump across to take a look at the commodities. A nice bit whistle stop talk, guys. But to be quite frank, today it's going to be about reacting. It's not going to be about going in with a set mindset. This could be this. Those stock indices could be 2% up or 2% lower. Okay. Gold continues to drift lower. Looks negative for me in here. Still looking for further downside. It's a real drift. But you can see any of these impulsive moves lower. Boom, boom, boom. Right. So and after having had these big impulsive sell-offs, but the spike where these spikes lower, these are the ones to be jumping on really. So just stepping back out to the daily chart, it is drifting since the big sell-off that we saw last week. But all downside pressures for gold. Would only really want to play that from the short side. And despite the rebound we've had in here, oil got right down close to yesterday, get close to last week's low yesterday, spiked below it and rebounded here, just holding at this low over here. So this low in here is 93.45. This morning we held at actually just got below there, 93.37. So just pipped below that low and then rebounded. But again in here, hold a gun to my head, I'm more bearish in here. A bit of a you see there's a spike lower. We've got higher highs and higher lows now on the 15-minute chart here. But again, for me, the bearish tendency from both from the sell-off in here from the last couple of days, going back to the daily chart on oil, both from this sell-off and from the bigger sell-off in here, all leaves. You got both the sell-off from the last 2 days, and you got this bigger sell-off in here, leaving negative pressures. Is that going to counter this little kind of rebound we've had? Probably not. And if we go and put the Fibonacci retracement of just the sell-off of the last couple of days, what do we see? or the market has got above the 23.6, the most minimal, but it's not even back up to the 38.2% retracement. So, I would look for it to probably fade, and it's starting to fade from there already. For me, I'd be looking at, wanting to prepare the short and then again, waiting on the data. But look, we're just about holding this trend line. A break below, if you want a really sharp trigger below the recent low in here from just the last, 15 minutes, or sorry, the last hour or so, down through 96.25 looks negative. If you want to wait a little bit and get confirmation, you're waiting for it down through there, down through 95.34. But I would probably be happy to go on a break on the data below 96.25, but certainly adding in them through 95.34. So yeah, oil still setting up bearish in there for me. So gold and oil looking bearish, tentatively bullish, but I mean, I'm like 51.49 bullish on stocks, on the stock indices. I'd rather wait on the data, and then you're reacting to the data. It is very, very much a matter of reacting today. Sorry, missed that there. Morning, Clinton. Morning, whoever the other guys that are on. Anyone else is on today? Any questions? If there's not any questions, I'm going to wrap it up there a little bit early, but gives you time to prep up for the CPI. Big data, probably the most important data now each month. We're going to get, at least for the next few months and years, we still continue to deal with inflation. We are still watching the growth data for slowdowns, but at the moment, all eyes still on inflation. So we'll certainly be watching that. Get ready to react. Helmets and goggles on, guys. I'll see you on the other side. See you tomorrow for another webinar. Until then, take care. Stay safe. Bye.